Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spotted. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. You know what? I screwed up and my camera is not... Oh, hold on. Why is it not giving me music? Okay, yeah. I used the battery up on my camera. So for the first like 30 minutes, hour, we have no camera today. I'm sorry. It's okay. You don't really actually need to see me. We'll live. Let's come over and check out the charts. We do have, let's see here. We do have some Canadian numbers here in a few minutes. Not really something that usually matters too much. So let's come and look at the chart. So you come on in ZN, like we are yet again another 7 to 10 basis points lower, or rather higher in yield. This has just been quite the trend this week, man. I mean, when we had it on what was it? I guess this was 3 days ago, right? So this was like Tuesday. All right, Thursday, Wednesday, Tuesday. Yeah, when we had this on Tuesday, I was like, okay, yeah, I think we could probably see some further. Then we had this yesterday, and it was kind of hard. Oh no, it was, this one was kind of hard. And then it's like this one went, and this one went, and now this, it's like it just keeps going. It just keeps going and going and going and going. You had Fed speakers. Well, yeah, so we got Williams, Bowman, Schnabel, and then Powell at 9. A big slate of Fed speakers. This is just a wild trend, and I feel kind of dumb because I did not pull too much out of it this week. And you know what? Maybe it goes further. I mean, a lot of this was overnight. We do have to keep in mind a lot of this was overnight or like on specific pieces of news, right? So it wasn't actually as much opportunity for us as it may appear on the chart. But I do not feel very good today, so I might not take any trades here through this. S&P 500, another decent rally yesterday. I mean, man, there was, so some of the like 0 day to expiration options chasing sort of stuff is like just zany, right? Oil is kind of not okay. So I'm just seeing here, Alfredo, any thoughts on why Bitcoin is not following the market? Well, answer me this, why is oil not following the market? Isn't that even more curious question, perhaps? I don't know. And then let's come over here. Gold and silver obviously getting hammered as the rates get hammered, right? But copper also like just going sideways. And by the way, well, okay, it's changing today, but yesterday the dollar was moving strongly too, right? So typically in a risk-off environment, the dollar would decline, right? Here's Bitcoin kind of going sideways. Good morning, Uzi. So, I would say, let's come back over here. Oh, sorry, but what was the Canadian number? Core retail sales negative spot 3 versus negative spot 8. So negative, but not as negative as feared. So for Bitcoin, I'm not necessarily surprised. Because Bitcoin has a lot to do with how much liquidity is there out there. The more money there is out there in the market, the more money people have available to speculate on Bitcoin, and the more that their price tends to go up. So Bitcoin tends to be driven by like easy monetary policy to some extent, right? But like the other markets aren't doing that. The other markets, well, sorry, I skipped a part there. Okay. So we would not expect Bitcoin to be moving up because interest rates are going up and getting tighter, right? That's for Bitcoin. But then how do we explain that the equity markets is popping off and the oil and copper markets are not, right? How do you explain that one? Well, so I think there's a couple of things that we could maybe factor into this. So one is that we appear this week to have moved a little bit into more concern about inflation again. So a lot of people are talking about how the decline that we've had in inflation is primarily the cyclical component, and that the other component is still high, and that the Federal Reserve is likely to keep interest rates high for quite some time. And so, I think that the commodities have kind of been, if it really takes off, then if we really do get inflation, then it'll take off. But I think the commodities have kind of been holding back because they're not so sure that like this is going to be game on. They're going to leave interest rates here, so that means buy the things. They're not sure about that one. Also, things in China do not necessarily look very good right now. So oil and copper are driven very heavily by what's going on in China. So they kind of been holding back because of that, right? And then there's this other issue in the equity market, which is that the breadth that just hasn't been very good. When we look at the flows, there's not actually a lot of participation across the board in terms of like the types of participants that are involved here. And a lot of the action that we're seeing is actually short covering and so forth, right? So in other words, the market's outlook on the economy is not as positive as the recent action in the S&P 500 suggests. So does that mean that the equity markets are going to have a reckoning here soon? I don't know. But something's going to give, right? Good morning, Walter. You've been real good at coming in every day, bro. Good job. So I have a couple of things on my mind. One of them is that for some reason I am still not better. Maybe it's because the sickness has been replaced by allergies or something. I don't know. My voice is still kind of off. My sinuses are still kind of full. And it still kind of does this thing where it doesn't come out until I start talking here on the stream. And then all of a sudden I'm like, blowing out huge stuff, right? Yeah. Did I take a Claritin? I haven't. That was the thing, is I tend, when I get sick, I tend to stop taking it. You like it here? I'll try to come. Well, I appreciate it. Sometimes I'm sitting here wondering, like, what are you doing, Seth? So maybe I do need to just take the allergy pill today, and that will make things better. I don't know. But at the same time, like, I'm getting green stuff out. So doesn't that mean that, like, I'm actually genuinely sick? I don't know. But then the other thing is that I did some yard work on Wednesday. I think it was. Yeah, it was Wednesday. And I'm weird. And my body is weird. And when I do work, when I exercise, and I haven't been regularly exercising that muscle in a while, like it just always reacts poorly, especially my back. My back just like is so sore right now. And those muscles connect to your neck, so it's like kind of hard to look up, and it's very distracting. It's very, very distracting. So like I kind of want to trade here. I don't know if I really should. I can see there's a decent amount of level 2 activity on the board. We're going to have a bunch of Fed speakers. I assume that they're probably going to continue to be hawkish. So they could continue to move us up to like 3.7, 3.75. But when I'm in that kind of a situation, or when a person is in that kind of situation, man, you know, I've made some bad trades in when I'm feeling bad. So if I take a trade, I can be very careful, and we're going to need you guys' help, right? I think I get it now, Seth. Stocks and bonds move together in a bull market, but then when the economic gets stronger and commodities rises, the bonds fall due to interest rate increases or hikes. Well, yeah, so the bonds are falling due to interest rate increases or hikes, but we're not sure if the strength that we're seeing in the equities is really genuine, is really reflective of strength in the economy, right? I think that the selling that we've seen in the treasuries is kind of more reflective of the bond market just being like way overdone, you know? Like when you come back and you look at this and you're like, okay, market S&P 500 says everything's fine. You know, I need to come back and show you from here. Everything's fine. Why did we come all the way up here? We had this whole like regional banking problems, and then we stayed up here. Right? And by the way, after yesterday's action, we are now below all of the daily moving averages in the treasuries as well. So I don't know. Remember, it's kind of funny. At the beginning of the week, because I had made a video about how, you know, there's this huge basis trade going on in the treasuries and all that sort of stuff. And so a lot of the big players are short right now. And somebody was saying, well, you know, it sure would be nice to have a juicy short squeeze higher. And I was going to make a video that was like, well, here's a couple of reasons why you may not want to just be trying to fade that, right? And by the time that I had the time to be able to make a video, it wasn't really relevant anymore, so I never did it. But like, come on, it's just been down every day of the week. So all of these professionals that sold it on the basis trade and everything, they really made money, didn't they? And like I said, I mean, if the economy is, if everything is hunky dory, why would we not come all the way back to like 111 in the 10-year? Well, I tell you what, this selling is just already, it's already like turning into another trend here today. In fact, I would say that today it's the trajectory is even faster than it was earlier in the week. Surely because we have crossed the moving averages and everything, there are a bunch of momentum players coming in short today, huh? The liquidity is a little bit weaker again today. It's back to like 1600s. I don't know if, you know, even if I felt good and I was willing to take a trade, I don't know if I could just go short there. It would be tough. That would be tough. Now, we haven't really talked a whole lot about the flows, but that's one flow that we got here in the treasuries is like continuation of this selling. It is now getting to the point now where like the sentiment and the trend and everything is extremely negative in the treasuries. And so I think you're seeing some continuation of selling off of that. We got a bunch of Fed speakers today. It is Friday. So You know, Fridays sometimes can make things kind of tight, right? But we have a big options expiration today. I don't know if the options expiration matters as much in the treasuries. I think that we've got a bunch of stuff going on next week with the roll and everything else. That's probably going to be the important thing with the treasuries. But for the equity markets, you know, seeing all of that, you know, all of those Greeks turning into 0 day to expiration dynamics and stuff, we're gonna need to pay attention to when the S&P 500 opens up, because that's probably going to set the mood for the rest of the session, and we'll see what they do. There are some people out there saying that, you know, when this turns on in the ES, that there's going to be some wild stuff happen on the open. So we'll see. Man, my voice really just does not sound very good today. See if I can clear it out a little bit. What's this going on in Discord? It made me cringe so bad those times he was deep into the red and just kept adding to turn a profit like weeks later. Yes, people... It really does. Like, I feel like all of the incentives around the streaming encourage people to do like excessive risks and kind of ill-advised things, and it's kind of like weird that I feel like everybody, well, I mean, I will do it on sim occasionally, right? But I'm starting to feel like everybody in the industry is doing that. I don't know, it doesn't really make sense, my sickness. Green means infection, suppose. I don't know if if it's a sure thing that it means infection, because it has to do with like, you know, certain means your body is doing certain things. I think that could still happen with allergies in certain situations, but what I don't understand is like why it's getting worse. Like, I thought on Tuesday or whatever that I was good, that like I was getting over it. I exercised a little bit. I was like, time to get moving again, and then I got worse. And I thought, oh, well, yesterday was maybe like a temporary setback, and now today I'm even worse than yesterday. What's with that? Hmm. Am I wrong that like how much a streamer is trying to monetize, or rather how little a streamer is trying to monetize their channel doesn't really say a whole lot about whether it's a channel you should really watch? Is that, you know, overstepping my bounds here? I've been seeing this a lot for some reason the past day. I don't know why. I was reading a thread on Jigsaw about one creator, and now somebody's talking about another creator in Discord. But like, you know, somebody asks, okay, well, what do you think about this creator? And then the first thing that people do is they come in and they're like, well, they don't have this and they don't have this, but they do have this. You know, it's like, well, they used to, or somebody was, so I guess I kind of have to get into specifics, right? So one of them was somebody asked about Humbled Trader on YouTube. And people were like, well, when she started out, she didn't have any stuff, but now she has like a bunch of courses and all of these things. And they said that they were disappointed in that. And it was just like, everybody thinks that like the key tell of whether or not somebody is actually teaching you something useful to trading is how much effort they put into monetizing their stream, which should be indicative of like how much money they're actually making trading or something like that, right? And I'm really not sure. I mean, I've never really seen that to be indicative of anything, you know? And meanwhile, I'll see these streamers and people will be like, oh, I really like watching this guy. And it's like, well, okay, but like, how do they trade? Like, what do they teach? There's just some of these guys that people really, really like. But they can't tell me what the person is actually teaching. Like, I feel like I can tell you what we're teaching here in one sentence. We're teaching people about empirically proven stylized behaviors of order flow and how you can utilize those things to your advantage in your trading. That's the basis of what we're teaching here. And number two is how to use informational inefficiencies in your trading. You know? I don't know. But like when it actually comes down to it, why do people decide to watch who they do? I mean, look, it's not like everybody has to come and watch my stream. You know, maybe it's a better thing for us if not everybody's watching our stream anyways, right? But it's just kind of like, what can we learn about people from it? Well, it seems to me that people choose who they watch not based on any kind of objective measure of how it's actually going to help their trading, but rather based on how they feel about the person. If they like the person, they'll come in and they'll watch them, regardless of whether or not the person is doing degenerate trading or any of that stuff, you know? I'm probably at a disadvantage in that respect because at the end of the day, I care more about things than I do people. It's not like I don't care about people, but I care about people like on like a, you know, it's on a level that's like, oh, you know, people are important and that's going to matter a lot to how well you do in ventures and stuff like that, you know, but like the reality is like the genuine natural interest I have is just like not there. In fact, what I think I've been doing is like, I think about the community a lot. I think about like who's watching, you know, what are the things that you're doing in the stream? Because when we're doing this here on the stream, the reality is I'm not necessarily interacting with individuals. We should probably try and work towards doing that more. But the reality is that I'm interacting with the community as a whole, and the community is not a person. The community is a thing, right? So what I'm doing is I'm turning people into a thing. The information provided is absolute gold. Yeah, I appreciate it. You know, I was thinking, what do you guys think about this, by the way? Real quick. Mulder's got a good comment here, too, that I want to address. But I was thinking maybe one of the videos that I need to make is about trading education again. Because I'm starting to see the conversation a lot. And I feel like that the content that I have on the channel about this is not sufficient. Because, you know, basically what I said in the past was that you don't need to spend a ton of money on trading education to learn how to trade, and that, yeah, you know, maybe it's worth it, maybe it's not. It depends a lot on you and a bunch of other factors, but you don't have to spend that money, you know. And that was kind of always my take on it. Now I don't think that that's enough to guide people on what to do, because I still get people ask me questions a lot about, well, you know, they're thinking about a certain education and they're not sure if it's worth it. So here's my evolution on trying to teach this. Okay, I think that there are 3 levels of education. Okay, the first level of education is the mechanics. So this is, how does a market work? What is it that you're actually looking at when you're looking at the DOM? Okay, so like for my order flow series, the first like 3 videos of that video series is level 1, right? I'm explaining to you how a limit order book works and the sorts of things that you tend to see on a limit order book, right? That's level 1. Now, the issue with level 1 is that level 1 will get you to where you can place trades, but it does not tell you necessarily what to do, what trades to place, etc., right? So level 2 becomes about how does the market tend to act, right? This is the stylized behavior of markets. So videos, you know, like my video of proven market behaviors and the inelastic theory of markets, the videos that I have on specific instruments and their tendencies, the videos that I guess we still have to make about correlations and macro dynamics and that sort of a thing, right? Those are all like level 2, right? Where you will get really screwed up is that people will give you bad information, bad level 2 information, essentially. Shouldn't call it level 2. Should call it tier 2 education. People will come in and give you incorrect tier 2 information, and you're building a network in your mind about how to trade this, and you're incorporating this incorrect information that then gets ingrained and programmed into your brain forever, right? And so the reality is that most education and most retail traders out there are not getting a sufficient tier 2 education. They're getting, you know, my education course, I guess you could call it, let's call it that, my education series on the order flow is the only source out there in the trading education space that I have seen that I think does a sufficient job at this. I've not. Now there are books you can read. You can go and read books, and you can read studies, and you can figure all that stuff out on your own. But none of these courses are really teaching you that stuff. Okay. And then there's tier 3. So tier 3 is you already kind of know how the market behaves and so forth. And so now you're using that information and trying to read the market live and bit by bit learn how to incorporate that information into a trade, right? And so what I think a lot is happening, especially with streamers, is that when you're on stream, you get focused on the tier 3 stuff. Yeah. And the reality is that most traders are not to a point where the tier 3 stuff makes any difference to them. You know, like where you want the tier 3 stuff is like, you've been trading for a few years. You have a good handle on what the stylized behavior of markets are, and you have a proven edge, and you're, you know, at breaking even, baby, right? And so now it's just a matter of zeroing in, getting a handle on your behavior, and, you know, pruning down that neural network and making it really efficient, right? To do that, you need somebody that's experienced, you know? You need somebody else that's experienced and that's worked with a lot of different traders to help you do that. That's the point at which, like, education could pay off, right? Because everything before that, you can either get for free or you can get from books that are less than $100, right? Spending thousands of dollars on those first 2 tiers of education, in my opinion, does not make sense unless you're doing something very, very niche, right? So like, you know, like Gary Norton, he has a very niche course on the market making thing. Will that make you a ton of money? I don't know. But if you want to do market making and that interests you, you know, that is a tradition that is dying out that we would like to see continued. And so maybe that's worth it to you if that's your thing, right? So there might be some, and that's kind of where the issue is like where the education ends up being worthwhile is like really niche things. And then it's like the benefit that really niche thing actually has to you is actually worth the education. I mean, it's a lot, right? Okay. So it's only when you get to tier 3 that like that sort of stuff would help. And then, but then at that point, really, you would be paying for like mentorship, and then it's like super, super expensive, right? So that's the deal with education. And so again, I would just ask you to think about this. Every time that you're watching a video, every time that you're watching a stream, ask yourself, you know, what are they actually teaching me? Right? Am I being given tier 2 information about the market, that tier 2 education about the market that I can actually verify, right? and I think in most cases it's not. So that's the thing that I think that our stream does a really good job at. Thank you, T. Thor. Your information provided by you is absolute gold for beginners. Yep. And we have those videos, and then we come in here and we talk about it, and I think that I've been doing a really good job lately of showing how it's relevant to your trading. Yeah. Once I saw a dude turn 5K to 800K back to 5K on Wall Street bets, at least he made $500 more profit that night. Yeah. Well, and this is the other issue, is that you can get a lot done just by taking on risk, right? Like that's the thing, is you will make money faster by being an excessive risk taker, more than you will by actually knowing what's going on. That's why you end up with a lot of people that appear to be successful or gain some sort of a following without being able to actually teach you any of this tier 2 education, right? Because they built their notoriety on risk taking. So that's another like key thing. That's why I'm kind of like always giving this warning. So it's not like I don't think that you should be watching the stream, somebody else's stream, because they do that. But what I am saying is think about, why are you actually watching that stream? Is the thing that's attracting you to it that they're taking excessive risk and you're getting sucked in by that? Because if that's what's bringing you to the stream, it's probably not a good thing for you, right? It's probably going to drive you towards excessive risk taking as well. I need to learn and back test fundamentals. I think that the well, let's not call it fundamentals, but like macroeconomic dynamics of the market is like one of the most difficult bits to kind of sort out. Okay, can you share your opinion on auction market theory? It's false. So it was a really great theory based on the observations and information and forms of analysis that they had available to them at the time that auction market theory was first proposed and started to be used. And so it does have some level of efficacy, but ultimately their theory and framework around how the market moves and why the market moves the way that it does is wrong, and it leads to incorrect conclusions about the state of the market all of the time. And if you can understand why the market really does what it's doing, then that can be a big advantage to you. So what is wrong about it in particular is the auction market kind of works off of this idea that there's value somewhere. So if everybody agrees on value, then it will just stay there and won't do anything. Or, well, it won't, not that it won't do anything, but it will just trade in that range. And you get a lot of volume in that range, but it won't break out of that range. If people's perception of value changes, then the market will start auctioning up or down until the market feels that it has found a new reasonable value area. Excuse me. Right? That's auction theory. It's wrong. The reason that the market tends to sit around in one spot is merely because of liquidity dynamics. Like, why would you see a lot of volume in that area if everybody thinks that it's fair value? You don't take a trade when it's fair value, right? And similarly, not every move up is actually accompanied by an actual real change in value, right? You have a large move up and it could be just short covering, right? It doesn't tell you anything about the fundamentals of the market or anything like that, right? So really, when you're watching the market move up and down, all you're seeing is the orders and how the market orders interact with the liquidity. That's it. That's all it's telling you, right? But there are some behaviors that, due to, you know, too much liquidity being taken up at a time and all of those sorts of things, you know, the limit order book results in certain behaviors simply because of the math of the thing. And that's what creates this whole thing where, like, it'll sit in a range and then it will, you know, range extension in a certain direction. That range extension is large meta orders coming in and buying or selling, right? So when you understand what's actually moving the market, that really helps you in, you know, trying to make predictions about what sort of future order flows will come in and the trades that you can make on them, right? So you can kind of see how auction market theory would become so popular and would be kind of useful, but then in the end not be enough to really give traders an advantage, right? But now that you have that correct understanding of the market, right, you're going to be able to get all of the edge that you can out of the current liquidity conditions at the very least. And then you can just focus your active thinking on what are the things that I know that might predict future orders, right? I'm still going to make this volume profile video, but I don't want to do it when my voice is bad. So hopefully my voice is good next week. This sucks. I wonder if I have like long COVID. I feel like ever since we had COVID, I get sick more often, and I shouldn't be sick again already. It's got to be long COVID. Saw this thing the other day. They were saying that they think long COVID is caused by microclots. What factors cause the existence of market correlation? Well, so, oh, excuse me, I need to cough a little bit here. Has Bowman finished? I don't know. I haven't really been hearing too much. Sorry, have I been missing some? No, only thing I see here that I missed was Nick Timoros quoting Williams. The main longer-term consequence from the pandemic period is a reduction in potential output. At the end of 2022, the COVID-adjusted level of potential output is 4.2% below the pre-pandemic projection for the fourth quarter of 2022. Anyways, so the things that will drive orders in one market often ends up being something that will drive orders in another market as well. And so you will get a correlation between those markets. And market practitioners know this and start to utilize these correlations between instruments to value instruments against each other. And so I wouldn't say the majority, but a major factor behind a lot of arbitrage and market making strategies is what are related assets doing, right? Because a 30-year can be used as a substitute for a 10-year. Maybe if you can't buy a 10-year, maybe you might want to go and buy a 30-year. Well, there's differences between the two, but there's a lot of similarities too. And so you can kind of value them against each other, right? And this causes market correlations. Well, let's see here. When I came in here, it was like at 3.9, wasn't it? Maybe 3.8, I don't recall. Hasn't really ever backed off, has it? Gonna try blowing my nose again here. Ah, that was good. That felt good. So the whole thing is when we were up at like, what was it, 20? 113, 20? Yeah, I guess so, because now we're at 16. Now it was 20 and then it was 17. For a while it was at 20 and I was like, okay, is that ever gonna like bounce a whole lot up? And then nope, it didn't. It wouldn't move. And then it kind of did the same thing there. And was it gonna bounce up? Nope, it went a little bit lower. Are we really gonna be able to like just keep selling though? I don't know, like the way that it's been going the past few days, it's like the flow doesn't stop. Like you'll get deep pullbacks against you, but like if you just hold through the whole day, you still end up making money, right? Okay, is financial markets really a zero-sum game? So the financial market overall is not a zero-sum game. Why is that? So it's not a zero-sum game because companies actually do make money, right? So the reality is that the majority of the vast majority of participants in financial markets end up making money from their participation in the financial markets. Okay, but within certain narrow contexts, there are zero-sum games. Okay, so like intraday day trading is a zero-sum game. A futures contract is a zero-sum game, right? In other words, if you're day trading, you're participating in zero-sum games. You're making money at the expense of somebody else. Now, in futures, a lot of these guys are hedging. So even though you're making money and you're making money at the expense of somebody else, it's not so adversarial as people kind of picture it, right? Because he's taking that trade as a hedge, and so he may expect to be losing money on one side of it, but that's what he's got to do to protect himself, right? And then you can take advantage of that. In other words, you're making money by taking on risk that other people don't want to take, right? That's why, again, I said it's easier to make money from taking on risk than it is to actually know what you're doing. And that's kind of a dangerous thing, because if all you're doing is taking on risk, eventually that's going to blow up in your face. Does your backtesting suggest that retail should focus on momentum rather than mean reversion? I don't think that I could say that. I'm not quite sure what would be an experiment or a metric that would say that you should focus on momentum rather than mean reversion or anything like that. But I think the first thing is that we often kind of misconstrue what those things actually mean. So like when we're here talking about day trading and we say momentum, right? Momentum to most retail day traders is that you have a strong trend, right? So probably we should use trend trading, right? Because momentum is more broadly is a larger portfolio strategy where you buy the assets that are up the most and you sell the assets that are down the most. And on that front, there is an edge in trading momentum that is quite well established and proven. And the vast majority of the professionals in the futures trading space, the CTAs, that's what they're doing, is they're trading momentum strategies. That's why when you get a day like today, it seems like the flows are just super bearish and strong, right? But the research also shows that those momentum strategies benefit greatly by factoring in some mean reversion into them as well. Okay. So just focusing on one or the other isn't as good as understanding both of them. And I think that you're going to find that, because we could really think of the market as, instead of thinking of it as a market that's going to go up or down, you can think of it as a market that's either going to continue or reverse, right? Here we have a place where we have formed a little bit of a distribution, a little bit of volume has traded in here. We may be in a liquidity hole. It does look like they're having a difficult time getting out of here, although they may be having a difficult time getting market orders overall now. Okay. So, what's the next move going to be? Is it going to be up, which would be a reversal, or is it going to continue through, and that would be a continuation, right? So, if you think about it from that perspective, whether you do continuations or reversals, it's better for you overall if you can do both. And the best traders are the ones that are really good at being able to recognize what type of market we're in and switch from continuation to reversal strategies when it's appropriate, right? there are a lot of these guys, like, again, that I say most of what they're doing on stream is just taking on risk. And there are some people, and to be honest, I don't watch these people very often, so I really couldn't comment on whether one individual is doing this or not, but there is definitely some degree of, they only know how to reverse the market. Whenever there's a trend, they're trading against that trend like every time, and they don't know how to adjust that. Maybe I should go on the continuation, because I tell you what, there are some really, really great profits in continuation moves, right? Now, one thing though that I would say is that when we're talking about predicting future order flows and using informational inefficiencies in order to predict those future order flows and gain an advantage, that is generally going to place you in trend trades, right? Because the whole premise behind it is that large meta orders are going to persistently move the market in one direction, and you're taking advantage of that, right? So that's going to tend to tilt you towards the trend trade, right? So in this situation, I still think that I should not trade today. I really want to, though. Maybe I'll change my mind, because this just seems like this is a trend that's just never going to give up. But, if I was taking a trade today, I would be, looking for an opportunity to try and go short on the expectation that these kind of flows that have been pushing the market down will continue to be persistent. Now, if this was something that happened yesterday and it seems to be happening again today and would maybe give us a little bit of a pause, is that the cumulative delta in ZN is not to the downside, it's actually to the upside, and it's similar for ZB. Now ZF is going down, so it looks like that we're being driven by order flows in the shorter term treasuries, and that these other markets, the flows are different. That can kind of make it a little complicated, right? It's much more optimal when all three of them are just flowing in the same direction, right? Just take what trade, it's lonely out here. Oh, I'm sorry, Uzi. I don't know if I can do it, man. Because I'm sitting here in a chair and I'm sitting still, my neck isn't bothering me as much. This is something that really drives me crazy. I think it's because I just have immune system problems. And I recall there being, I don't remember the name of the condition, but I think that there was a condition that I had as a baby that basically meant that I was likely to have kind of immune system problems my whole life. But man, if I when I'm working out, I very much prefer to be doing full body workouts, because if I try and do a split sort of a thing where it's like you train upper body twice a week and lower body twice a week or something like that, what'll happen is I'll train my biceps on one day, and then I don't come back to that muscle group again for another week. Then they just get inflamed and sore like every freaking time. And it's like that with everything. Like if I'm doing a new exercise, I have to be careful about how hard I push it, because if I push myself as hard as I can, then the next day I'm sore, and really, really sore, And it was just this time, what we were doing was this guy, oh my gosh, this is so sad to me, but he doesn't seem too bothered by it, so I think it's okay. But he bought some grass to put out, and then they started working on the sprinklers. And so this is a bad idea, guys. If you're doing your lawn, don't buy the grass until everything else is ready. Okay? Yeah, everything else is ready. Take a break or two to wait for the grass to come, and just have everything set up so that when the grass comes, you can immediately take it off of the pallets and onto the dirt. Okay? Because otherwise what ends up happening is it sits there and it kills the grass. So anyways, this guy, he put all this dead grass out there and it was bad, so he decided to trash it and buy new grass. I've seen so many people lay sod down and then let it die. Yeah, it's not the first time I've seen it. This is the first time I've seen where they were like, well, it's just a loss, I'm just going to buy all new grass. But apparently this guy has the money to do it, so. So we were rolling the sod up and throwing it up into a big truck, you know? So I was taking the grass and, you know, like really launching it. And that was, you know, that involved some upper back, I guess. And it just really hit my upper back. And, you know, like the first day after doing that, it was like, oh, it's okay. But then you start getting the delayed muscle onset soreness and all of that sort of stuff, which my understanding is related to immune system reaction. And yesterday it was really bad. Like yesterday I ended up taking an ibuprofen to try and get it to calm down. Today it didn't feel very good when I woke up, but once I showered and I took a racket ball to it and everything, it's better, a little bit better. You know, it's been an hour. I think we could probably turn on the camera. Well, let's see what the... I think we're okay. Kong balls. Yeah, no, sorry, it's not a racket ball, it's a lacrosse ball. I use a lacrosse ball. And they are really good. And what I do is I have a lacrosse ball. Like I have one of those showers where, you know, it's like a glass shower and there's like a top, it doesn't go all the way up to the ceiling. So I'll just put a lacrosse ball on that top track. And then I can roll my back against the wall in the shower. Worked really well. You know what I really want though is a more aggressive foam roller. I have an okay foam roller that has a PVC pipe in it, which makes it last a long time. Let's see if I can find it. That's it right there. You want cortisone? This probably is not it's probably not an appropriate situation for cortisol. When I was having problems with my elbow, so I showed you guys that picture, didn't I? Oh man, let me find that again, because that was freaking nuts. My roller is basically a cylindrical thwomp from Mario Brothers. I don't remember where I put it. Maybe it's on my machine. Yep, there it is. So the doctor wasn't sure if it was like I bumped my elbow and had a fracture and then it just never got healed, or if this was like that repeatedly got hit and grew a bone spur out. But basically I've got this huge bone spur coming off of the end of my elbow. And so one day I was kind of lazily leaning on it, and what that does is it basically shoves all of the tissue into that spot and pinches it and causes it all to get inflamed, right? And that took a couple of weeks for that to go away, but that might have been a situation where a cortisone shot might have helped, but we didn't actually end up getting one. No, I want a rumble roller. One of these ones, these purple ones. Oh my gosh, I think these are so great. I have one at the gym, at my weightlifting, Olympic weightlifting gym, and I love that one. So I should just get one. SD bar stance? Oh, I see. Oh, you have one that's like that, huh? That's all spiky. It would be good, right? Because sometimes, you know, I don't like cracking my back a lot, but sometimes you just have this little thing where you know that, like, it's not quite sitting right because the muscles are tense, and this really gets those kinks out, you know? What's this? Deep in the bowels of Wall Street, there's a surprisingly successful counterfeiting operation underway, imitation quant trades. That sounds like a bad idea to me. Hold on, let me blow my nose and then we'll read this story. Good fun lumbar when sitting too. I don't know. I think I have like this larger mental problem, which is like, if I don't feel like I have some greater goal that I'm working towards, and, you know, some sort of feedback mechanism where I feel like I'm being successful at that thing, you know, I'm just not happy. Otherwise, and I would call it like your competitive nature, right? And so this idea that, like, okay, I need to be healthy, exercising will help every other part of my life. By the way, on the open here on the ES, we are getting quite a bit of volume here. You know, those are things that I just need to do every day. Hard to motivate myself, you know? If we have a competition and I need to lift so that I can prepare myself for my competition, easy. Different sort of a thing, you know? And I think I've come into a spot in my life in a number of places where I did the thing that I wanted to do, you know? Like, I wanted to make okay, so we had a YouTube channel. That just kind of happened. So then we said, okay, well, let's use it and do some things with it. Let's learn how to make videos, like one-off videos. Okay, good, we did that. Okay, let's get a bunch of equipment and learn how to do that well and make a good quality video. We did that. And then, okay, let's get all of this kind of education, tier 2 education that doesn't seem to exist anywhere else other than market microstructure research papers and books, and get that out to everybody so that retail traders will have the information that they really need to stand a chance at being successful day trading. We did that. And now it's kind of like, what am I supposed to do? You know what I mean? I accomplished the goal, and I'm not sure what the next goal is. It's like, well, I would like the YouTube channel to continue being successful, but what are the interim steps between here and there? And it often seems like the interim steps between here and there are maybe things that I might not be good at doing or I can't do for some reason. How to make successful calls on the ES? Well, I think that I've given you all the information to do that yourself. I can't necessarily make the strategy for you, unfortunately, right? Because what you're going to have to do from there, after you know all the stylized behavior of markets, and you know, like the macros and the places that you can find informational efficiency, what you're going to have to do is you're going to have to look at yourself and you're going to have to say, what are the types of things that I tend to understand very well, or sources of information that I might have that other people don't, and all, so that I can see where I'm going to be able to develop that edge on the market, right? I can't do that part for you. I can't build your strategy. I can only show you how to build a strategy, but I can't build your strategy for you, because only you know you and what your temperament is and what information is available to you and what edges you might have that other people don't, right? That's the way it is. Start a hedge fund. Yeah, I think that there'd have to be a lot of steps in between there first. Like, I really don't think if I went out there and I started a hedge fund, anybody would give me money. Like, one of the big things I've learned is that the money manager needs to have, you know, the more that they have at stake in the fund, the more likely other people are to willing to put their money into it. So if I'm just begging people to give me money to trade it, that's probably not going to go very well. Well, they made another little, just a tiny bit, but another little bit of a move lower. And on that one, there was some order flow going short with it. So now, by the way, is there something wrong with my news squawk here? Because there have been some Fed speakers and I haven't really seen any headlines about any of that. What new Senate bill proposes federal agency to police digital media? It would have the authority to fine users for misinformation and hate speech. That's wrong. In obviously a bill like that's never going to pass, but it infuriates me that there's anybody in a position of the Senate that would propose a law that is so blatantly unconstitutional. Well, there's something else that we were supposed to go into here. No. Went into it. I think it's a bigger, like, start a hedge fund. Another problem with the start a hedge fund is that that's probably not the YouTube channel itself, you know? That's like starting another venture that's separate from the YouTube channel. What do I need to do with the YouTube channel? Because at the moment it's like it's the like, okay, there's this video and this video I need to make, but then after that, then what? I don't know. I feel like I need to you know, maybe shift some directions and do some new things to grow the channel, you know? I don't know what it is. But then on the other hand, Acid Trading Challenge Live. I mean, that was kind of how things started. I kind of don't want to do that because I feel like that encourages people to go and do the combines, and I think that that's one of the things that's holding them back, right? Or how about this? The challenge that I'm doing right now is have a 12-month period You know, just a 12-month period on the micros where you're paying your expenses. That's the challenge. That's the challenge that I think people should be trying to go for. Holy shnikes. What was that? Big old monster order at 14. Chasing it down. Actually, it looks like it chased it down no, it went from 15 to 14. Quite a bit of volume comes, and he moves again. Wow, wow, wow. Well, that is definitely some action that you want to be a part of, but now that it's happened, and all of that would make you think that there's some news, but I don't actually think that one was news, and I'm not hearing anything on the news stock. Okay, did he pull? He pulled. I don't know about that one. That is a little fishy. There's something Fed guy said about extension or debt ceiling. Okay, so you must be talking about this. I don't think the X date is June. The closest approach is 6/9. I've developed a model which projects the deposits and withdrawals every day. My full analysis model output 43 days at I don't know if that matters. They're talking about when is the day that they absolutely have to increase the debt ceiling. I think they're gonna have a deal before that anyways, so I don't know if it matters. Man, that sure went. So the last place that we saw that big order was at 12.5. And then they extended a little bit further. So if I had gotten involved in this right from the get-go, when I said, can they really continue all day? I guess that's what's been happening. You could go for it. And we've moved like 30 ticks since then. But what just happened there is something that's very, very likely to create a liquidity hole, if not an outright reversal. And one has to wonder why that big order was being put out there like that. That could be a spoof. I do find the timing of it a little bit suspicious. Treasuries is like watching paint dry. Okay, so the other day we went and we got paint to paint on metal, and so I found this paint that does a hammered finish, is what they call it. So there's like two different chemicals that react with each other, and when they do, it will create like a little pool, and so these little pools push each other out, and then it creates this ripple effect that makes it look like you finished it with a hammer and did a bunch of little hammers, right? And watching that, like putting it on, because when you put it on, it's perfectly smooth, and then you watch it form the pools and stuff. One of the most interesting things I've ever seen. And we sat and stared at that for a good 30 minutes or something like that. Watching paint dry, it was so effing interesting. I think what happens to you is that we're training our neural network, you know, and part of it is that your brain will release dopamine when certain things happen, right? Like you can tell for me, when I get a big stop run, and I would say that the move that we just had there qualifies. That was pretty thrilling. But especially when I get a stop run and I'm in it, man, that gets me going. I love that. But for most of us, you know, just seeing it move, you're in a position and you see it move your direction, that kind of gives you that boost. And so especially if you come from an instrument like ES that's always constantly moving, you know, when you come over into the treasury and it doesn't move, you're not getting that chemical reinforcement all the time, and it kind of messes you up, and then you're like on board. But if you start with the treasuries to begin with, then, and you're reading the changes on the inside and everything, all of a sudden you realize, you know what, there's actually interesting things going on here all the time. Hey, Full Momentums, thanks for stopping by. You know, it all keeps coming back to this whole thing that's like, you know, the natural thing that we want to do as traders very often ends up being not good for you, you know? Well, that move was a little bit, this is exactly what I was worried about. In fact, I wonder, well, no, I'm still in a position of, I don't know if I should take a trade. I don't know if I am well enough to take a trade, but I could have reversed that. I know that a situation like that is very likely to have at the very least a short-term retracement. It's not very often that you get one like that I could actively reverse, because it's like if you come in here, right? Like before, like the ones that we had before, it was sitting at like 8. No, let's go back to like the 20. Yeah, it was like sitting at 20, and then it fell to like 18, and then you're like, oh well, okay, maybe I could reverse that. Well, yeah, but like if it retraced that, it's only 4 ticks, right? Whereas in this instance, it went from 16 to 11. It was 12 ticks, right? And you know that there's probably a liquidity hole going all the way back up to 15. So that one was one where we could have sold 3.716 and taken 10 ticks off of it. That does not happen every day. Howl unloading some inventory. Now, I really think that it's probably CTA's chasing, but that last one that we had there, that may have been spoofing. That whole thing was a little suspicious. That's either somebody trying to manipulate the market or somebody really desperate, right? It's legal for the market maker to push it just to get the sellers out. Well, okay. You use push. If I'm quote unquote pushing it, I'm maybe not acting as a market maker anymore, right? But yes, your orders have an impact on the market, and that impact could affect other traders, and there's nothing illegal about it. That's just trading. that's like a really important point that we have to make, just because there's a lot of information false information out there about this, right? If I'm a market maker and I'm short, how am I making this fall? Am I selling it down the whole time with market orders? Well, then I'm not actually market making, I'm pushing it, right? And if I'm doing that, if I'm pushing it, I'm adding inventory the whole way. So how am I going to get out? Right? A bunch of people are going to have to sell into me in order for me to get out. So it's a risky thing to do that. Right? The reality is that the market maker, for the most part, is just putting out what they think is the best bid and offer based on correlated assets and managing their inventory. So if we've moved down and I'm long inventory, then I'm not going to add more inventory as it goes down. I'm already to my max, right? I have to wait for it to rebalance, and I'm going to have to, any opportunity I have to take fills on the sell side, I'm going to have to take them to reduce my inventory, right? But if we're moving down and I'm already short, then why hold my bid really solid and get out then and take the profit right then, right? Why not pull and let it keep going until you get the flood of volume and then take the fills, right? So it's managing inventory. Yeah, and the market maker just widened the spread, and people see that as their get out price is further away from them. Yep. And then they all bail out, and then you fill it up there, and the liquidity hole perhaps forms, and then that just becomes an area where you can rebalance your inventory. Right? So that's what the market maker is doing, and the block buyer, block seller, these large meta order guys, they have a bunch that they have to buy or sell. And so for them, if I'm going to sell a ton of it, I'm not going to come out there and try and shove it around. I don't want to shove it down per se. I might want to shove it down a little bit to create a liquidity hole so that I can execute in that liquidity hole. And then I want to let it come back up before I do, I want to have as little impact on it as possible, basically, right? So when you get a move like what just happened there, or when you get a stop run, it's not necessarily in the best interest of these players for that sort of a thing to happen, per se, right? This whole idea that it's quote unquote manipulation is, I think, a misnomer, because they're just natural consequences of how the market behaves, how the market works. That these things are just going to happen naturally on their own because you're using a limit order book. So, well, it's not like you said something wrong, Alfredo, but my answer was kind of like that because it seems like in the question that there's an implication about how the market works. It's like a common misconception. So I don't think that that's what you intended, but I have to cover it just in case somebody else watching, So I don't want to give them an incorrect model. Cool. I'm trying to be really cognizant today because I feel like that I haven't done a very good job lately of trying to build the relationships on stream with individual people, you know what I mean? You know, like if we really want the stream to ever get bigger, I'm gonna have to be better at that, because that's what's, you know, people are watching because they like the creator is ultimately the thing, right? So the more likable I am, the better it is, and then we're gonna be able to get more people to actually learn and understand this important information, right? And give people a better chance of being successful, because just giving people the information, and you know, that doesn't seem to attract people very much. Well, we do appear to be recovering it. I think that I would, I did the pullback trade, and I'd maybe be taking it off now, though. It should, though. Yeah, it should, though. But that's just not how people are, right? Like honestly, you know, if I try and look at it from the larger perspective, you know, if you're coming into a stream every day and yeah, you're getting good information that helps you trade, but watching that stream makes you feel like shit every day, you're not going to keep doing it. You're just not. Even if you really want to, you're going to have a very difficult time keeping to that, right? So the reality is that you kind of have to get a little bit something more from it. And the problem that I have is that I'm so focused on the things, you know, I'm so focused on the market, how I can help people understand the market better, etc., that I'm not giving people the other part of it, the community part of it, that's gonna make it easy for you to be able to really come in here every day and trade with us, you know? Because there are other streamers that have channels roughly the same size as ours, but their streaming audience is almost 10 times larger. Right? So that speaks, I think, to something that I'm doing wrong. So you guys are gonna have to help me with that. I guess at the end of the day, like when I look at something and I'm like, well, but I'm maybe not necessarily good at that, and there's kind of all these problems with doing that. Well, that's where I'm gonna have to utilize you guys. That's what that means. Because we're in it together. Maybe the 10. Oh, do we have 10 that's watching right now? That's actually relatively low. At one point it was 21, so that's kind of weird for it to go from 21 down to 10. That's actually really weird. I don't know what to make of that. Well, they might be better entertainers, but this feels more like university. Yeah, I think taking more trades will help. Yeah, that definitely would. Like, for the really casual viewers that are maybe even viewing things for the first time, and they come in and they don't see me in a position, they'll lose interest very quickly, won't they? More interviews. Well, interviews might be a larger channel thing. I don't know if that has anything to do with the live stream. Now, viewership today might be just a little bit lower in general because it's a Friday. That is the thing that tends to happen. But like the number of views that we've had overall today is about on par with what it usually is. And that's kind of the thing, is like, I'll get about 100 people to come in and watch on a day, right? And, you know, it's a question of, are you able to retain them, right? Maybe interview. Oh man, that just makes me sick even thinking about it, man. I would not be able to stand. I just cannot stand listening to that guy, man. I really don't understand how anybody stands watching those videos. It's really quite insane to me. This is where it goes back to, like, it seems to me that getting the algorithm to push you out means more than anything, right? Like, if you have a buddy over at YouTube that can go and turn that switch on that says, okay, we want to specifically promote this content for this creator or this subject or whatever the deal is, and I'm telling you, they have one. TikTok has one. I bet you YouTube has one. Then you can have like the dumbest content ever, but people will go to it, you know? So I consistently come into this spot where it's like, okay, if I want to make the stream more popular, like, here are some things that I can do better to try and do that, right? But then I will go and look at somebody else that's really popular and see that they're not doing any of those things at all. And I really can't explain why they have as much viewership as they do, other than that maybe they're just lucky, you know? Definitely over when you go across the entire space, though, definitely the people that are taking more trades and are doing some sort of degenerate thing where it makes it look like they're making a lot of money or whatever the deal is, people are getting more interested in watching them. Yeah. I think Powell. Why do you think it would be Powell? I don't know, we do have Powell speaking at the top of the hour. Nah, I really think that it's probably commodity trading advisors. I think that the big tell in here is that right from the open, it was just persistently selling and quite aggressively that whole time, you know? It's kind of cool that it ended up in that really massive plunge there at the end, you know? That's not something I would have expected to have happened on a Friday. That sure was some wild. See, now the question is, because that was really was quite a move. That was one of the wildest things we've seen in a long time. We used to see that stuff all the time, but that one was wild. How do I put that into text? I mean, I think that's something that is somebody that's into order flow trading, never seen that before. They would want to see that, you know, see that play out. But I don't know how to put the title of the video for that to indicate that that's what happened. You have great takes on big picture stuff like microstructure and flows. That's my favorite part, but you don't do much macro focused live tape reading analysis. Well, so I am trying to do the macro thing, though. I think that maybe I don't go over it enough because I usually say most of that stuff at the beginning of the stream, right? And what I do is as I come in and I look at all of the different instruments, which way are they going, and what that might be telling us about what's moving the markets today. Because I'm always tracking where's the money coming from and where's the money going to. So do that. And I do a little bit of tape reading. I mean, when something's actively happening and I can see it, I will talk out loud about what I'm seeing and reading. But definitely more trades. Maybe I need to have a video thumbnail that is less serious. Maybe that's what it is. I need to have something in the video thumbnail that is kind of wacky and off the walls. How about that? So that people know that I'm not completely serious. The thing is I am completely serious. That's so, you know what? So this is something really, really weird about me. I don't think we've ever really gotten into. Raymond says no. The reality is that I am not naturally a serious person. Like, if I am not on my medication and I am just with family, I am really quite embarrassingly silly. You know? But then I get trading and I'm on the medication and everything, and I am just 100% serious, and it's too serious. It's too intense. You know, it's like, because I'm getting that norepinephrine. It's keeping me focused, and that's norepinephrine is like, you know, maybe your life is in danger sort of a thing, you know? So I'm like locked in, dead serious about that, right? Most of the time. And I think a lot of people, when they're looking to watch a video, they're looking to have fun, you know? Well, we have fun. We've been better at that in the past. Lately, though, I've just become so dead serious all the time. What do you think is happening around noon? Why do you ask that? So, if we're talking about noon Eastern time, I don't see anything on the calendar, but we do have at the top of the hour, we have Beds Powell speaking, so. Oh, keywords? Yeah, you know, I've done a lot of research on keywords. I feel pretty good about the keywords that we're using. I think the things that you would help would be, one, having more fun so that we have better retention, and two, a thumbnail that pulls more people in. And I'm saying, well, education is better than fun. I think that we can do both. Or those two things don't have to be mutually exclusive, right? Because the reality is, I 100% believe this. I think that you're getting the best trading education on YouTube. If not the internet, frankly. Because nobody else is teaching this shit. This is like, if I went to Goldman or this is probably what they'd be teaching you, right? I don't know why everybody else ignores it, but this is like essential stuff. It's the best education out there. I think I'm already the best at that, right? That's the whole thing. The best education is apparently not enough for YouTube. Other channels, they don't seem to want to be right other than sharing what they think is happening. It's a lot easier to come in and say, this is what's happening, and present like certainty on it, rather than trying to teach people about nuance and different theories and stuff, right? That it ends up being really pedantic, doesn't it? Yeah, nobody talks about Almgren Chris for sure. Really? Yeah, or even just like the word optimal execution. Like, what is optimal execution? Why do other channels not talk about that? maybe there are other channels that have spoken about it and they're just never popping up because the YouTube algorithm doesn't share them. Maybe the what am I looking for? Maybe the globalist elites don't want you to know about this stuff and are intentionally throttling the channel to prevent this information from getting out. That must be it. I would rather sit in a math class than go to a movie. Well, Raymond, good for you, but you should realize that you're kind of weird. This is like one of the really difficult things as a creator, and I think it's something that every creator struggles with, is that as a creator you are weird. Most people are not like you, and it can be very difficult to get from what's going on in your mind and getting to understand the mindset of the average viewer, right? See, those of you that are here today, and by the way, it's quite active chat today, I would say. For the number of viewers that YouTube claims that we have a lot of activity, which I think is kind of weird. You know, those of you that are here, you're going to be the ones that are interested in learning about the market and having those kinds of discussions, right? But the problem is, that's not most people. Not everyone has a good heart like you. If they are making money from trading, they tend to keep their mouths shut. Yeah. And a lot of the people that are making money from trading are not, they don't really have good hearts, are they? Right? There are people that are just willing to do anything. This is one of the things, this is, you know, when you talk about like the red pill or whatever, you know, finding out the truth about the world is not really like the ideal that we want to think that it is. And I think that one of the hardest red pills to swallow is to realize that a very large portion of the most successful people do not have other people's best interest at heart. They only care about themselves, and that's why they were able to be successful. I was a bit surprised you're so open about market details. Well, I mean, if I tell 12 people, is it really changing anything? You know, if I was Brian Watts and I had 100 people watching me, then I might need to be a little bit more careful about what I say, right? Besides, you know that if I had come in here and been like, okay, let's just sell it, it's a trend day down, it would go up, right? I can talk all I want if I'm not in a position. If I say I'm not feeling very well and it's a Friday, so I'm not going to take a position, I can say whatever I want. It's not going to matter. As soon as I start taking trades, then the market's going to be like, oh, okay, let's start fucking around with stuff. Some people that make money in the markets don't have the ability to communicate that well, so they don't spread the knowledge. Yeah. Well, you know, I wonder, am I actually that good at communicating or not? I'm not 100% sure. I actually think the thing that I probably excel at is being able to filter the information. Like, I have the ability to go through and look at all of the information that I've learned in the, 15 plus years that I've been looking at markets, to digest down to you the things that are going to be like the most useful to your trading, right? That's the thing that I'm really truly good at, because there are a lot of guys out there that end up being really good teachers, but they didn't pick up on this stuff. And there's lots of things that they say where I can kind of tell that, like, they didn't realize the significance of certain things. You know, there might be something that they miss and they don't realize it, or that they know, but they're not pointing it out because they don't realize it's an important thing that people have to be told, right? We barely understand you, especially your accent is so... Do I? No, I do not have a thick accent, do I? Would it be better if I enunciated very aggressively? No, I'm not from Scotland. Would that be better if I can't even do a Scottish accent? Dude, Scottish people are so hard to understand. Probably could do a Scottish accent if I was, you know, outside of my trading hours and I had a little bit of practice ahead of time. Like I said, it's so weird, man. Like, when I'm on the Adderall, it's like you just get like this laser focus, you know? And for me to like switch over to something, it's really hard. You know, like for me trying to switch to trying to be a little bit more fun and engaging, it's hard. It's really hard. You haven't been on the channel in a while. Oh, hey, how are you doing? No, actually, we've actually been doing really well. Like over the past month. So I did not take very many trades this week, unfortunately. I really wish that I was more aggressive this week, but you know, there's reasons why, and I don't think that it's 100% me. You know, a lot of it was just the conditions in the market weren't the best for me at the time, but we're still making money. So, you know, I should probably be up like $300 this week, but that's okay. Up $300 instead of like 10 or whatever it is that I took. Actually, I think I'm 15. Are you gonna stream? No, unfortunately, that's when I have to go. So that sucks, right? I don't know if J Powell is actually gonna be that interesting though, because isn't it? So let me pull it up here. I engaged as participating in a panel, so I don't know if that one's actually going to be that big of a mover. Due to participate in a panel discussion titled Perspectives on Monetary Policy at the Thomas Labaugh Research Conference in Washington, D.C. Oh, I could be wrong. So when I say a panel discussion, that often makes me think that that's like, you know, there's an interviewer and they ask a number of people about something. But sometimes that has also just been a one-on-one interview. So I don't actually know what it's actually going to be. And it's not on their like little calendar thing, so. What will Powell have to say to cause Yen to go up? He would have to say something dovish. He would have to say, okay, so if he said, I am very confident that we can, that we won't have to raise interest rates in June, that I think would be within the realm of possibilities. That would probably cause the treasuries to buy aggressively. Because there's kind of two things going on here. One is they're repricing what the June is going to be, with some participants realizing that the chances of a rate hike in June are higher than what they were. Like earlier it was like 25% chance, and now it's probably closer to like 35-40, right? So there's that side, and then the other side of it is further out the curve. The market had been pricing in that the Federal Reserve would eventually have to reduce interest rates. And now they're starting to back off of that prediction. Do you think the highs are legit? Are you talking about the highs in ES? So, no price is really actually legit within that kind of a perspective, right? Price is not a reflection of all available information of the fundamentals, anything like that. People tell you that that's what the case is, but the reality is not. It is only a reflection of people buying and selling, and that's it, right? Now, what we can say, though, the way that I would present it is that the largest order flow pushing the S&P 500 to the upside the past 3 days or so has been mostly due to squeeze. Yes, has been mostly due to a squeeze. We're not seeing the like long onlys, kind of some of these other bigger players that have been absent from the market. We're still not seeing them coming in and participating. We're also seeing still 0 day to expiration and other kind of intraday option strategies moving the market really quite excessively. So it's like a really odd situation because like volatility is actually really low right now, and market has already moved into like a summer style market early, but you wouldn't know it from looking at the 1 minute chart of the S&P 500 because you're getting this intraday volatility that's just insane from the 0 day to expiration options, right? So that makes it a little bit harder for us to read just from looking at the price and the order flow, and we have to rely more on information from these trading desks to see who was actually buying and selling and stuff. But when we go and reread those, what we get is that it has been mostly short covering in passive flows. So practice playing poker that has better odds? Maybe. I mean, normally I would be struggling big time in this market, and while I am finding it difficult, I have been doing well, so count your blessings, I guess. Man, I am still when I blow my nose, I'm still getting pretty nasty stuff to come out. All right, well, now is a good time for us to come over to Zero Hedge and see if there are any news stories. Let's see, our top story is still FBI is concerned that January 6th footage would expose undercover agents and informants. That's been a big story. Is the worst behind us? Question mark. That's probably from another website. Stocks drive higher as FOMO eclipses tail risk worries. Morgan Stanley dips on report that Gorman is to step down as CEO. Oh, interesting. Oh, this one is new. I haven't read this. Let's read this. Okay. It's mega cap tech call option day. Goldman's derivative guru on what to watch for in today's options expiration. Hold on, I need to blow my nose. Okay, today is one of those 12 days a year where the 0 day to expiration and monthly options expirations are the same. And despite the overwhelming strength from yesterday and Goldman noting that it is a relatively small expiry with a total of 1.7 trillion in notional, 735 billion of this morning's expiry, with the remaining 1 trillion of this SPX PM plus ETF single stock. Spot Gamma believes there are some reasons for concern. But first, Goldman's derivatives guru Brian Garrett sets the scene. Dealers are now long ATM and downside options, but short upside tail. As of this note, for any breakout risk, the 1 month trading band hasn't been this tight in years. Okay, so basically they're saying if there was to be some sort of an explosion in volatility today, it would be really particularly bad. Historically, this level of coiled spring has a short lifespan. Now it's just a question of breakout or breakdown. So what do we have to worry about with the options expiration? Spot Gamma explains that if we did not get enough call gamma rotating upward today to higher strikes, then this means that 4200 stands as a call wall and resistance. Except for that we're at 4224, so Also, it is troublesome how little relative put open interest there is on SPY for today's monthly options expiration. If we have that many more magnitudes of call gamma disappearing, then that gives it enough of a boost to compete like it is a major quarterly OPEX with respect to how much sticky volatility killing gamma is getting removed. Further, we are removing market gamma from a context of being in positive market gamma territory. The gamma index printed at a very solid 1.4 today. These three elements combined are grounds for caution. Despite the low realized environment, Goldman's Garrett highlights that index volatility skew is reaching 1-year highs. The correlation between skew and PB net positioning was extremely high last year because who needs puts when you are underinvested? This is no longer the case, but I would note that if April expiry was 10-10 bearish, then May expiry is a 7 out of 10 bearish. Finally, Garrett warns of one thing to watch for. Friday should be known as Mega Cap Tech Call Option Day. The upside volumes have been steadily increasing in this name, specifically when they become 0 day to expiration convexity. There's a significant amount of delta associated with these options and would highlight there have been days where hundreds of thousands of calls have been traded in the first 10 to 15 minutes of the session. However, aside from that insane delta grab, Spot Gamma concludes that we can interpret the probable implication of call gamma disappearing overall today as meaning a widening of the percentage trading range. In other words, they expect a little bit more volatility next week. Such weakening in liquidity forms a hole in the ceiling for a gamma squeeze, but also a sharp move down, especially if the call wall sticks tomorrow at 4200 and does not get pushed up by this move. This is far from saying it can go up or it can go down, but rather specifically forecasting how there should be an increase in realized volatility and likely an increase in implied volatility as well over the first week after the monthly options expiration. I don't understand why this 420 didn't act as a wall, but rather as a magnet. I don't know. I think when they wrote this was before we got above 4200. It looks to me like it was actually providing some resistance, but they bought through it. Because they did kind of bounce off of it 3 times yesterday before eventually pushing higher. What is the fastest and most efficient way to learn all the correlations and interrelations in the markets? Maybe some books. So I would say that This is something that is really best learned with experience. And so trying to do it the most fast and efficient way is probably not the best way to go about it. But the most important thing that I think you can do is go and read this financial news. You know, things like what I just read. Of course, that doesn't have to do with the macroeconomic environment, okay? But what we just read about what's going on with the options teaches us a lot about, you know, what drives orders, right? So that's a really important thing. And then if we come back, if we had like major economic numbers, right, then we would get all of these analyst reports about what they are reading from the economic data, right? And that's the best sources for learning that stuff. And you just kind of learn it as you go, what is relevant to that current market, right? And so one thing that can help though that you can do now is like go to Forex Factory over here, and then come over and change it. You can change the view, and you can say this month, my settings, change your filter so that you have all event types on, but only the US dollar. And then every single one of these, especially the ones that are red, click this detail button and it will say latest release. Well, it will tell you what it is. Okay, measures a level of diffusion index based on surveyed purchasing managers in the manufacturing industry. This is ISM Manufacturing PMI. So then we can click latest release, and I can go and I can read the last report. View report. Manufacturing services hospital. Let's do services PMI. View report. Okay. Have decline cookies. Agree. Right. And then read this report. And read all of these reports for the last month. Or the last release that happened or whatever. Right. And see what it's actually telling you. And that's how you learn what all of these things are and how these will maybe affect different sectors and stuff. Rates and stocks seem to be diverging right now. It's tough for me to say that because it feels like the equities aren't really going anywhere. Right? I guess though, overall for the week though, the play has been short treasuries, long equity indexes, which is what you see in a risk on environment, right? Okay, so Forex Factory is, I think, the best calendar to come in and try and understand what these releases all mean. Okay. The best place for like current reports on analysis, really what you want to read is you want to read the analysis from the top walls, you know, top guys on the street. So that's going to be like Goldman Sachs and Investment Research, JP Morgan, these kinds of guys, right? But if you come to Zero Hedge, they often have stories about that. So I have a couple out here, over here, right? What's the next one? Is the worst behind us? Could massive monetary support have softened the deep bear market many expected? It's an interesting question, particularly given the Fed has hiked rates at one of the most aggressive paces in history. Combined with inverted yield curves, surging debt levels, and weak economic data, a recession and bear market seem assured. I always shudder at the four most dangerous words in investing this time is ever. However, could the massive amount of monetary support combined with trillions in government spending change historical? Oh, absolutely. Because what matters is orders, and if you're putting money into the market, then it's going to move the market, and it's going to prevent bar market, right? Anyways, I don't know if I really want to read this whole thing. This is a pretty long story, right? But this is looks like a story that in your own time is worth reading, right? So Zero Hedge is a really great place to go. I'd also say like the Wall Street Journal. I'd prefer the Wall Street Journal to Bloomberg, but Wall Street Journal tends to be a little bit more detailed stuff. But you know, there's all these different places to go and read information. Oh, we came all the way back to 3.7 again, huh? Interesting. And then I guess the last resource that I should mention is this stream, because that's what we talk about here in the morning. You know, is we always spend a little bit of time talking about what we think is driving the flows for that day. And we spend a little bit of time talking and debating about where we think the economy is going, right? It's an important thing because, you know, a lot of people think, well, the market is just a reflection of the economy, and so all I need to do is look at what the market is doing and I understand what's going on in the economy, and I don't really need to understand all of that deep economic BS. It's not true. The market is just a reflection of the people buying and selling, and that does not perfectly reflect all available information about the state of the economy. So you have to track those two things separately. And that's going to mean, because we always know where the market is right now because we can see the current price, but we don't necessarily always know exactly the exact state of the economy. We only, you know general things when reports are reported, and that information is already kind of a little bit old and it's not super precise, right? So we're, you know, the economy is kind of this like hidden variable that we can only kind of try and estimate where it's at. And we come in and we do that every day. Should probably be drinking my water more aggressively. I've been blowing my nose so much. There's a lot of junk for it to try and get out, I guess. Well, I tell you what, it's been a quiet stream today. It's kind of weird. Like, we've had a lot of good discussions. You guys in chat have been very active and involved, which is great. I really appreciate it. I feel like I've done better at the things that I wanted to try and focus on today a little bit. What? It's the... And you know, maybe it's a Friday, but there's just been less viewers today for whatever reason. It's kind of odd. Maybe we got some competition out there today or something. I'm gonna go look. Let's see. I don't know. Oh, that's kind of weird. So I come over here and I'm like, let's search for day trading and see what other streams are out there today. Okay, so Matt's there. I expect him to be there close to the top. Somebody I've never heard of before. No, actually, TradeNet, I think I have heard of them before. Here's the one I've never heard of. That one has Zendo. That is a lot of viewers for the number of subscribers that they have. What? It shows Matt another time. It shows Matt twice. What's with that? Huh? What the heck? Bookmap does a live stream now. They have 700 people watching. Man. That was one of the things that I've noticed is that when the platforms started doing their own streams, our numbers started to go down, which kind of sucks because it's not like those of you guys that have been watching, like you're still there, right? But the like the casuals that were getting it, you know, when they came to the YouTube front page, were just looking for something to occupy themselves with, and then they just happen to click on something. It's not sending me to very many of those people anymore. What do you think about trades by Matt? He seems to have asymmetric risk reward on most trades. Yep. That's exactly it. You know, like the truth is that I don't really spend very much time watching them, right? I know who Matt is because people mention him a lot, and he's probably been by far the most successful in the space from doing that sort of a thing, which is kind of interesting because he doesn't make like one-off videos like I do, right? Most of the videos that he does make is like the same setup as his stream, and he just maybe records himself as a full thing. Now he has an editor, but it's different, right? So I've never sat down and watched an entire stream of his. I've never sat down and watched him. And you know, I'm totally down with like working with people too. But, you know, it'd have to be one of the things that I find really difficult is like, you know, so I'm going to talk about empirical evidence, right? Unless somebody is willing to say, okay, yeah, let's work, and we will rely on empirical evidence to guide our decisions, right? Then be like, okay, let's go. Here's what I can tell you, right? And totally be willing to help with people with it. Because when I look at Matt, from what I've been hearing from him, it kind of sounds like he's got a couple problems and could use some help. He literally doubles down so much, it's so dangerous. Yeah, well, and with him in particular, I almost wonder if this stream doesn't like kind of encourage him to do that sort of stuff too. You know what I mean? So I don't know what you do about that. The thing that I find interesting about Matt is the evolution of the viewer base on him, because for a while it was like, you know, he was being talked about a lot, and people, you know, when people, they'd say, who are you watching on YouTube? And Matt's name would get brought up a lot. Now, whenever I see Matt's name comes up, there's like 5 people responding to it, complaining about him and saying exactly what you said, Poopy Head. So it's like, I don't know, but I've never spoken to him. If he, you know, if he was like, you know, I feel like I'm having a hard time and I would like to see what you might have to say about it, and be like, yeah, let's do it. But otherwise, I'm kind of like, I not really have the interest in watching other people's streams, I guess. One thing I will say is that Matt's, because I had somebody come onto the Discord that appeared to be masquerading as Matt, so I went over and joined their server just to like double check that I had the right users and stuff like that, right? And they have like a really active Discord. It seems to me that the Discord was probably actually what brought him his success. I have a really good Discord. I mean, we have probably the largest futures trading focused Discord that's free out there, but I haven't really run it as like a Discord for my stream, and I think I kind of missed out on some of the things that people have done to Discords to make them more engaging and stuff. That's kind of one of those things that's like on my list, and I just kind of forget to go and do and see like, oh, how can we improve Discord to increase participation? We did make that guided discussion thread. I really like that. I hope to see more people talk about that. As per previous conversation, that is quite entertaining, but you don't learn anything about trading other than maybe what not to do. Well, from what? From watching like Matt? Yeah, I don't know. Like I said, there's 3 tiers of education: the mechanics, learning the actual behaviors of the markets, and then refining your trading. And, you know, a lot of streams end up being level 3 when people don't even have level 2, right? Yeah. Because the question is really, what are you picking up from it? Because every time you're watching content, this happens every time you're watching content, regardless of how engaged you are in it or anything. You are, and especially when you're watching a live stream, because when you're watching a live stream, it's kind of like, because I'm spending this whole time talking, right? It's kind of like you're giving me permission to speak in your head for you, because you're probably not talking to yourself in your head a whole lot when you're listening to me, you know? So while you're listening to me, that is training your neural network with data. And what is the net effect of that? Well, for us, is because of what we're talking about is what are the flows in the market and what is the state of the economy and so forth. Then you're learning those things that we're saying you need to have for trading. What causes orders to go? What actually is going on out there in the markets, etc., right? Some of these other streams, I'm kind of concerned that all it's training you to do is be a degenerate gambler. And like I said, I don't know if that's really what happens when you watch Matt's stream, because I've never watched an entire stream. I just know, like, generally what people say and generally what it's like. And, you know, I do have some concerns on that, right? You also learn how to drink. Being cute is an edge on YouTube. Is that what it is? Am I not good looking enough for you guys? Is that what it is? That's got to be what it is. What if I traded with my shirt off and you could see my hairy chest? Would that make the stream more popular? I should become a VTuber and stream as a cute anime girl. Oh, that's something I should look into today, because Google had a new application out. How much is he making via YouTube stream? So I would say that if you are above the 50,000 mark, that you're probably making around $3,000 a month just from YouTube ads. So this is why, you know, like, people were complaining about Humble Trader, like she has this marketing team and they have an education course and all of these things. Well, in order for her to really bring her business up to where, like, she's becoming really rich from it and she's supporting a small team, you have to have those things. The YouTube advertising isn't enough. It's unlikely, from what I've seen, that my YouTube channel will ever be enough for me to live on without like affiliate links, right? You make a lot from affiliate links. Affiliate links combined with the YouTube advertising revenue, maybe we get there. But in all honesty, I make more from the affiliate links than I sometimes know what to do with. Because when I say that, like, I want to invest everything that I make from the stream back into the community. And sometimes it's hard to know what investments would really actually be yield the best for you guys, you know? What do you think of Meet Kevin? So Meet Kevin is one of those ones where I honestly cannot figure out how he got so popular. And I mean, he really truly became popular. But like when I look at his thumbnails, when I look at the titles of his videos, it's not. And I think part of it is that it's probably different than what made him popular. His channel probably behaves differently now that it's like such a big channel. I don't understand what made him so popular. I think when you look at guys like Matt, so like Matt, he trades price action and he trades the E-mini. So really what happened was there's a lot of people that want to trade price action E-mini, and so they congregated to him. That's and then, you know, he had a couple of lucky ricks, and that's how he got as big as he did, right? Then there's the other guy in our space that seems to be popular is Brian Watts, right? Who I understand disappeared for a while and came back. But I think that Brian Watts is kind of more popular because he's kind of got the degenerate gambler thing going on, right? Like people are going over there because they think that he's throwing big trades out into the market and making big plays and stuff, right? If I was constantly coming in and I was, you know, risking tens of thousands of dollars a day and I could prove that it was all live, then I'm sure I would probably have a huge audience, right? But when you come in and you just trade micros, they're like, oh, well, he's just risking $5 to $10. That's not interesting. which to me is, I'm kind of like, I'm okay with it like that though. I kind of prefer it to be that way. Like I think the way the world works and the way that I've always found it is that the best sources of information tend to be humble and underground. And it's like everybody else passes it by, and the people that are willing to come in and see beyond the flash and the glitz and just look at what are they actually teaching, what is actually going to help me, and then you find the best information, you know? I knew this guy, he taught karate, and he had kind of his own karate essentially by that point. They called it Jarkido, but it was like him and his best buddy, and then, you know, if people asked him, he was willing to let them in. So like I was doing it for a while and my wife at the time was doing it, and then there was this other guy and there was like a kid or two, and they were just doing it in like a public area where anybody could see it, and there was no marketing or anything like that, right? And this guy, every year they would do like the karate competition in the state, and they would have this sparring, and this guy won every year. Literally won every, so literally the best karate fighter in the state, just running this tiny little class that anybody could come in and go, but like nobody realizes it's there, right? Or how many times have you found where like the best food ends up being like in this tiny hole in the wall restaurant, right? Like popularity often ruins things. You know, if we got too popular, it would ruin things a little bit. I think we could handle 100 viewers, but much beyond 200 viewers, and it would start to be a problem. Does Amar want us to refresh his website so that we can keep seeing the fear and greed index? I don't know. I haven't heard anything from them today. Have they been? Oh, in fact, I'm come over here and I can see that my voice isn't actually running. Oh, that's funny. I wish I could stay for Powell, but it's about time for me to get going. I don't know what kind of, is this going to be one of those like one-on-one Q&A sessions again? Because last time around that really moved the market, didn't it? Yeah. Well, I think we prepared you guys for it enough, right? The Federal Reserve speakers as of late have been kind of leading hawkish, with some of them saying, oh, you know, I'm not sure if a pause in June actually is appropriate. And so we're going to see what Powell's opinion is on that. That's probably going to be the thing that people are going to be watching for. And if he says something like, you know, I really feel confident that we can not do a rate hike in June, and or something like that, which is within the realm of possibility for him to say, you probably see this market move, right? We know the hawkish stocks are just bluff. I don't know about that. I think that what the case is that Powell is likely to be hawkish as well. But if he says something dovish that contradicts what the other Fed speakers said, it could very much that would be a big contradiction of like the whole rest of the week's action, and so you would probably see a lot of volume off of a comment like that, right? So we'll see what happens, but let's try and come up with a title for today's stream. ZN trend continues to stop run crescendo. That order flow that we saw, what was it, a little bit after the S&P 500 opened, sure was something else. And it kind of moved out away here, but we're still relatively low, so the market is even kind of saying that, hey, maybe we're not done for today. Who knows what next week holds? Do you think that they could just keep selling it again next week? Because it's been such a massive trend this week. Pay attention to yourself. I don't know what I'm gonna do this weekend, but I want to work out. Hopefully this runny nose goes away. All right, guys, I'll see you next week. In the meantime, and by the way, thank you. I had fun. It was a good stream today. Stay